Inflation is when the cost of stuff keeps going up over time, and recession is when the economy slows down and things like jobs and spending take a hit. Usually, when inflation is high, the economy is doing pretty well, and when there's a recession, inflation tends to be low or negative. But things can get more complicated than that, and a lot of different factors can come into play. Lately, people have been worried about inflation because of the COVID-19 pandemic messing with supply chains and causing labor shortages. Governments and central banks have tried different things to keep things stable and prevent things from getting too out of hand. As for what the future holds, it's hard to say for sure, so in this video we will take a look at questions like, how long will it take economies to go back to normal after the post-pandemic recession? What steps do countries have to take for this recovery to happen? And will we have to always choose between rising prices or a recession, or are there other options? Over the years, we've seen high inflation rates when the economy is doing well, and low inflation rates when things aren't so hot. Similarly, when the economy is booming, we see fewer recessions, but when things slow down, recessions become more frequent. But here's the thing, the COVID-19 pandemic has made everything worse. The pandemic caused a huge mess with supply chains, and it messed up labor markets too. This caused a lot of problems, like shortages of essential goods and labor, which in turn led to higher prices for everything. To make matters worse, a lot of businesses had to shut down temporarily or permanently because of the pandemic, which put even more stress on the economy. For example, the travel industry was hit hard, and airlines were forced to cancel flights, which meant a lot of lost jobs and money. Another thing that happened was that governments had to spend a ton of money to help people and businesses through the tough times. They had to offer things like stimulus checks and loans to keep things afloat. While this was necessary to prevent a complete economic collapse, it also meant that the government had to print more money, which can lead to inflation. All of these have left a lot of people wondering how long it will take for things to go back to normal. How long will it take economies to go back to normal after the post-pandemic recession? Well, the short answer is that it's hard to say for sure. But let's dive into some of the factors that could impact the recovery process. First off, it's important to note that different countries are experiencing different levels of economic recovery. For example, China's economy is already growing at a fast rate, while the U.S. is still recovering from the pandemic's impact. Similarly, developing countries may face different challenges than developed countries when it comes to economic recovery. Now, let's talk about some potential timelines for economic recovery. According to the International Monetary Fund, IMF, global GDP is projected to grow by 6% in 2021, which is good news. However, this growth may not be evenly distributed across countries. For example, the IMF predicts that advanced economies will recover more quickly than emerging markets and low-income countries. Some experts predicted that it could take until 2023 or later for economies to fully recover from the pandemic. This is because even after the pandemic is under control, there will still be challenges to overcome. For example, businesses that shut down during the pandemic may not reopen, and some industries may have permanently changed as a result of the pandemic. That said, there are reasons to be optimistic. For example, many industries have adapted to the pandemic by shifting to remote work and online sales. This could lead to new opportunities and growth in these areas. Additionally, the pandemic has accelerated the adoption of new technologies, which could lead to increased productivity and innovation. What steps do countries have to take for this recovery to happen? One key step is to implement policies that stimulate economic growth. This can take many forms, such as investing in infrastructure projects, lowering interest rates, and providing financial assistance to struggling businesses. Governments may also need to reform regulations to make it easier for businesses to operate and create jobs. Another important factor is consumer confidence. Even after the pandemic is over, people may still be hesitant to spend money on non-essential goods and services. To address this, governments may need to provide incentives for people to spend, such as tax breaks or rebates. They may also need to communicate with the public about the steps they are taking to promote economic recovery, and assure them that it is safe to resume normal activities. In addition, countries may need to consider measures to address inequality and support vulnerable populations. The pandemic has disproportionately affected low-income individuals and communities of color, and it is important to ensure that these groups are not left behind in the recovery process. This could involve measures like expanding access to health care and education, increasing the minimum wage, and providing targeted financial assistance to those in need. Another important step is to prioritize sustainable and inclusive economic growth. The pandemic has highlighted the need for resilient and adaptable economies that can withstand future shocks. Governments may need to invest in renewable energy and other sustainable technologies, support small and medium-sized businesses, and prioritize workforce development and training programs. International cooperation will be critical for a successful economic recovery. The pandemic has shown us that global challenges require global solutions, and countries will need to work together to address issues like supply chain disruptions, debt relief, and international trade. This could involve initiatives like debt forgiveness for low-income countries, increased investment in global health infrastructure, and international agreements to support sustainable economic growth. There are many steps that countries will need to take to facilitate economic recovery after the pandemic. These may include policies to stimulate growth, measures to address inequality and support vulnerable populations, prioritizing sustainable and inclusive economic growth, and international cooperation. While the road to recovery may be long and challenging, taking these steps can help to ensure a brighter future for all. Will we have to always choose between rising prices or a recession? Or are there other options? It's a common belief that economies always have to choose between rising prices or a recession, but that's not necessarily the case. While inflation and recession are both economic phenomena that can impact an economy, there are other options available to address these issues. One option is to pursue a balanced monetary policy. This involves managing interest rates and the money supply in a way that balances economic growth with inflation. Central banks can use a variety of tools, such as open market operations and reserve requirements, to influence the amount of money in circulation and the cost of borrowing. By carefully balancing these factors, central banks can promote economic growth while keeping inflation in check. Another option is to pursue fiscal policies that support economic growth. This can involve government spending on infrastructure, education, and other public goods that promote long-term economic development. By investing in these areas, governments can help to stimulate economic growth while also creating jobs and supporting the overall health of the economy. One other option that countries can pursue to address the challenge of inflation and recession is structural reforms. Structural reforms refer to changes in the underlying structure of the economy, such as improving the efficiency of markets, reducing barriers to entry, and increasing competition. By addressing structural issues, countries can create an environment that is more conducive to economic growth and stability. For example, one area where structural reforms can be particularly effective is in labor markets. High levels of unemployment can contribute to recessions, while labor shortages can lead to inflation. By implementing policies that promote job creation and workforce development, countries can help to reduce unemployment and increase the overall productivity of the economy. Another area where structural reforms can be effective is in the financial sector. Regulations that promote transparency and stability can help to reduce the risk of financial crises, while policies that promote access to credit and financial services can support economic growth. By creating a stable and efficient financial sector, countries can help to support long-term economic growth and stability. It's important to recognize that there is no one-size-fits-all solution when it comes to managing the economy. Different countries and regions may face unique challenges and require tailored approaches to address them. For example, some countries may need to focus on promoting exports and attracting foreign investment, while others may need to focus on improving the quality of their infrastructure or addressing social inequality. Again, as for what the future holds, a lot will depend on what happens with the global economy, politics, and other factors. But one thing we can be pretty sure of is that policymakers will be watching things closely and trying to keep things stable so we don't fall into a recession.